My name is Joyce Salam. I'm a Chief Strategist at Tricio Investment Advisors. And for the week of the 1st of June, 2026, we shine our spotlight on gold. At Tricio, we have a very mixed view on gold. John Cavalier, our chief economist, usually says it has really no real economic value besides, we can use it as a base metal or electronics. James Chu, our head of investment solutions, realizes that gold has sentimental value for a lot of investors and it can fulfill some sort of need to have this hedge in their portfolio. I look at it as a potential inflation hedge for some people, hedge against fiat money debasement for other people. That's the way the markets work. So right now, our weekly spotlight is saying, is this peak gold? And the reason for that is we had the US war in Iran take place and gold prices have come down. It's one of those things where you look at this and go, huh, things have really changed, where Iran goes to war, the US goes to war, and yet gold prices go down. Now, it could be the case that prices had risen sharply beforehand on the view that maybe there was going to be a war. Sure, you can buy into that to some extent. And the gold bugs argument for the last few years has been that central banks are buying gold in order to avoid Western sanctions, US, Europe, things like that. On each side, China's increasing purchase of gold. Now, it could be the case that China is saying, well, we have to purchase oil now, or we have to deal with the economic problems at home. And maybe we don't want to pay this much for gold. It's a good idea to buy gold when it was trading at $2,000 an ounce, closer to 5,000 or higher. Let's keep the dollar value the same and our average cost investing as is. Right now, though, we can look at the chart and see that the 13-week moving average is now offering resistance, and we're starting to work lower. Our view is that if we start breaking below the 4,220 area, where you have the 50-week moving average, if you start breaking below the 3,990 or 4,000 area, where you have the rising red line and the purple line just above it, that's one of those things where, yes, we could actually get a breakdown here. Early days, but if we do see that breakdown, then take a long, hard look and realize that the risk is all the way down at $2,000 an ounce. So gold has come a long way. We're saying it's now reacting, quote unquote, the way it should be reacting. Yes, you have the potential for Fed rate hikes, ECB rate hikes. Bank of England may be on hold for a while. RBA has already raised rates. RBNZ had a 3-3 split on their vote. So who knows? Maybe higher rates are, the next cycle for the major central banks. And maybe gold prices will continue to come off. If you want further information on our research insights, please contact us at tricio-advisors.com. That's advisors with an O. And if you like information about our Ask a Buddy service, where we help clients manage risk and build resilient portfolios, please contact us as well.